Hi everybody, I'm Bill Whittle. Thanks for joining us for this PJTV special, 5 ways you can save money on your taxes. Now, let's face it, millions of Americans dread the month of April because it's when taxes are due. Now, if you're one of those people, you're in luck, as we have 5 ways you can save money on your taxes. Some of these tricks you may never have heard of before. Now, also be sure to visit the PJ store, where you won't want to miss our special series, Death by Taxes, How the Government Steals from Us. It's available right now and only in the PJ store. Now, joining me today in studio is tax expert and certified financial planner, Ali Hashemian. Ali is a co-founder and managing partner of Profectus Financial in Los Angeles. Thanks for being with us today. It's a pleasure to have you. Lots of exciting stuff to talk about. So let's talk about some 5 ways that we can save money on our taxes. You can get a bigger return. You know, this thing is I don't know what the tax code is now, 70,000 pages? 70,000 pages? And it gets worse every year. So this is no longer the kind of thing that anybody can do on their own with any degree of success.
Absolutely correct. I think in this day and age, as it's gotten more and more complex, the need for a professional to help you is paramount.
Well, I was talking with our professional here before the show started. He started at the age of 3, so he's got a lot of experience. Let's start with number 1, child and dependent care credit. How does that work exactly?
Well, I think it's one that's missed quite often, again, mostly because people think that it is a lower credit. The maximum credit a person can get is $2,100 if they have 2 dependents in their household. Again, that may not seem like a lot, but it's not a tax deduction we're speaking about. This is a tax credit, so that's a dollar-for-dollar credit. So $2,100 is $2,100 in your pocket. And I think a lot of people don't know what it can be used towards. So, for example, it can be used towards summer day camps for children. It can be used for private nursing homes and as well for dependent facilities.
What about alimony? I know some people in show business have 9 or 10 of these alimony payments going out to different people. That's a sizable chunk of change. Can that be deducted?
Absolutely, and it's again important that you work with your professional to make sure how much of it you can deduct. In most cases, almost all of it or all of it can be deducted.
Is there anything else in terms of the household, in terms of your family, that we're missing that maybe people should be a little more aware of?
Just be aware it's not always dependents are not always children, right? In some cases, dependents are also older parents that are needing of help. In this day and age, we're seeing a lot of multi-generational families.
Okay, now here's one that's big. I know for most of us out here in California is especially aware of this. So if we look at the second item on our list, it'd be this whole idea of the kind of going green, the green revolution. There's a number of credits you can take advantage of for green energy, green treatments. I guess the government figures better to give you some money back rather than them having to spend it in order to get it done. What are some of the green opportunities that we have in terms of saving money?
The 2 big ones, cars, for your plug-in hybrids or your electric cars, up to $7,500. Again, a credit, not a tax deduction, so that's an extreme value for our clients. The other big one is on solar energy, solar heating, get a different type of clean energy like wind turbines on your home and things like that. Up to 30% of the value that you spent on creating those type of energies can be deducted as a tax credit. So again, a great opportunity for clients to save a lot of money on making those improvements, and some of those improvements are slated to go away in the tax code, so it's important that you take advantage of them while they last.
Now, I've seen people who've done solar heaters on their roof. That seems sensible, especially here in California, things like insulation and so on. That's just common sense, save you money on your electric bill in addition to the tax credits. But you mentioned wind turbines. Are there people actually putting wind turbines in their own property?
You won't believe it, but absolutely there are. Fuel cell type of situations.
Really?
Again, you can get a tax credit for those as well. So there's a number of different ones to look at. And again, it's important to work with not just the right professionals to help you install these equipments, but the right professionals to make sure that you're getting the maximum out of your tax credits.
Well, that's remarkable because really not only it's a tax savings when you actually install the equipment, but this is the kind of thing you save money on every month, right? Once you get it in there, it's going to save you big bucks.
And beyond that, you feel good about it, right? It's like that charitable deduction.
Okay, so number 3, this one I think has got a lot of people, I would imagine they're much more concerned about this year than in the past, and that'd be medical expenses, medical deductions. We could spend days, I mean generally days, on the turmoil that's been caused by the implementation of the Patient Protection Affordable Care Act that gets kicked down the road by fiat, by executive fiat. Nobody knows what policies are in effect, when they're in effect, how long they've been in effect, and so on. And this has got to be the kind of thing that must drive you personally crazy because you have to obey the law, and the law is changing so fast, and in so many cases is so vague that it's got to put you in a terrible spot. Certainly must put consumers in a terrible spot. So before we get into specifics, Ali, why don't you give us just sort of an overview in terms of how people's medical expenses can be impacted by their tax return?
Yeah, absolutely. Again, as you mentioned, in this day and age, the coverage supplied through healthcare has changed drastically, and maybe in the future, clients may be more dependent on required to cover some of their own costs. And in that case, almost all your medical expenses can be deducted as long as you meet a few criteria. And when I say almost all, that includes things like acupuncture, chiropractors, eyeglasses and contact lenses, even travel to and from a specialist that you may need to see for medical purposes, fertility enhancements. There's a number of different things that qualify for this. Again, the main things for a client to remember is that these have to be costs that were paid by the client out of pocket, not through their insurance coverage. They must itemize their taxes to get these tax deductions.
And the receipts are critical in a case like this.
Absolutely, receipts are critical. Retaining those receipts in the case of an IRS audit is extremely important, but this day and age, with the digital platforms that are available through most healthcare providers, that becomes easier and easier.
Can I just take a quick aside and ask you a question? It's more of a personal question really for me than anything, but I'm sure other people must be interested in this as well. So many of our transactions today are electronic transactions through either debit card or credit card. In the event of an IRS audit, would that count as a receipt, or is the paper receipt essential?
The paper receipt is the end-all, be-all, best receipt. But again, beyond just the paper receipt, in some cases, these healthcare providers are providing digital receipts as well, or you can go back and look at your digital receipts. So not just a credit card transaction, but an actual digital receipt that you can pull up through a database.
But if you were to go to your online banking, let's say, and say, look, here on this date was paid from this account, this amount to this medical professional, will that satisfy the IRS?
That's again, the IRS is going to look at that on a case-by-case basis in the case of the audit, and hopefully you're dealing with a better auditor. But absolutely, now you have a little bit of a track record. Again, the best tracking system, though, is those actual receipts or those actual invoices provided through the medical provider, which again can be done digitally as well.
You know, given the things I've said about the IRS, I don't imagine they're going to give me much of a break in that particular case. Let me ask you this, Aliyah, dental expenses. You know, it seems like the dental world is strangely set apart from medical expenses. Dental insurance, I remember when I was looking for dental insurance, I thought it was not really much of an insurance, really, in terms of the limited amount it covered and the amount of money in there. But dental expenses as well are expenses that can be written off or at least have some sort of deduction value.
Absolutely, and as you mentioned, a lot of people don't have dental insurance because of the reasons that you mentioned. The coverages are limited, or if they do have dental insurance, they're having to still pay some of those costs out of pocket, again, because those coverages are limited. So there are definitely those dental expenses that we want to take advantage of as well in our deductible medical expenses.
Terrific, terrific. Let's go on to number 4. And I think this one particularly is of interest to our particular audience here at PJTV because we tend to be a little more conservative, a little more on the self-sufficient side. So let's talk a little bit about retirement expenses. Some people's retirement plan consists of waiting for Social Security. I think anybody who's really taken any kind of look at all into the status of Social Security in terms of its financial standing, it's probably the kind of bet I wouldn't want to take, certainly if I was 20 or 30 years old. So let's talk about saving money for your retirement. Before we get into specifics, what would you say would be your general advice to people who wanted to start thinking seriously about retirement benefits as far as this year's tax return goes? First
and foremost, remember that your retirement accounts primarily are tax advantage accounts. So
what does that mean exactly?
Meaning that the client gets the advantage of choosing when they will pay taxes on that, up till age 70 and a half. So that allows us the ability to pay taxes potentially when we may be at lower tax brackets because we may have less income flowing in. Second, and most importantly, in retirement accounts, especially most employer-sponsored accounts, there is some sort of match. That is free money that the client is giving up when they're not contributing to those accounts. So outside of the tax advantage, we're talking about actual free money that is being provided by your company that you may not be taking advantage of.
Well, one of the things you must run into a lot, and I have to tell you, I'd love to tell you I was sitting on a mountaintop of moral superiority here, but I'm not. I'm actually down in the depths of the valley. And that is the level of individual discipline that individuals have. Some people are tremendously disciplined individuals. They can basically take, if they're a subcontractor or whatever, take their entire paycheck, set aside the withholdings, everything gets paid on the quarter, everything's grand. Other people, and I'm unfortunately in this category, have a little less problem with that discipline, and especially when you're living paycheck to paycheck. What about the idea of upping your retirement contributions through your withholdings. Is that an option for people?
Absolutely, through your payroll deductions, and in some cases, your best tax advantage option. So I like to tell people, if you are the type of person that doesn't like to set aside money for yourself, you may actually have better advantages by creating this systematic contribution plan. And again, we tell clients that not only is there that tax advantage, but there is, along with that, usually some sort of matching being done, so it's kind of a double effect there.
All right, well, we are moving the mail here. So it's so nice to talk to somebody who's got it down and has absolutely pretty clear picture. Let's move on to the fifth way that we have listed here for you to save money on taxes. And this is something I think is probably a little more arcane, but it's the earned income tax credit. Again, before we get into specifics, just tell us the basics of what that is and what it consists of.
Basically, it's a tax credit meant to help Americans with lower income, and it primarily helps American families with children. And so the lower the income and the more children that are involved in the household, the better the tax credit can be. Specifically, over $6,100 in potential tax credits for married individuals that have 3 or more kids.
Does this generally apply to lower moderate income
That's right. For example, for married individuals, to get that maximum credit, you have to be making, as a married family, less than $52,000 and some change.
Would it be fair to say that this is sort of a government estimate of what you probably could put together if you were to go to all the trouble? When you're dealing with low to moderate income, you don't have many options in terms of all of these different revenue streams. So the government is basically saying, look, if you come in on this bracket, we're going to give you $6,100, and do you find people are not taking advantage of that?
They're mostly not taking advantage.
That's shocking.
It's shockingly, unfortunately, the case in a lot of cases where they're self-filing again, and so, or they're working with a professional that is not spending enough quality time with them. And so I tell people, again, we hear a lot about how rich people are saving money on taxes, but that doesn't mean that the layman doesn't have some opportunities. Usually it's just the fact of the matter that they haven't looked into those opportunities.
Well, let's close perhaps by just some general advice to our viewers, and I think maybe the place to start with this would be, it's been my experience that of all the things that we have to face in our modern world here in America, I would say dealing with the IRS and filing your taxes has got to be one of the most phobic reactions that Americans have. Maybe it's right after public speaking. I mean, there are a lot of people who are just genuinely terrified of this, and I suppose there's a large number of people who are so terrified about it they just don't do it. What advice would you have to people who are either having problems getting through this year's taxes, or maybe they have a year or two of delinquent taxes? The best thing to do is to get them filed, and then you can set up an arrangement with the federal government and the state government. They virtually have to take something, right?
And again, it's just like almost anything else in life. Avoiding it or procrastinating doesn't make it better. In fact, it usually compounds that negative effect on it. So I tell clients to work with somebody, get on top of it, and like you said, usually there's some sort of arrangement that can be made that is more beneficial than just not dealing with it at all.
If you are one of those people that have had no problems whatsoever, that you know, not exactly, I don't imagine there's a single person looks forward to April 15th, and not even you guys, because I know you work 24-hour days starting probably in February, 7 days a week. But for the people who are more responsible, is there any just general advice that you would give somebody who's not got armies of financial planners behind them?
General advice I would say, on top of everything that we talked today about, is don't forget about tax avoidance for things that you can do to avoid taxes in the future. Today we spent most of our time talking about ways that you can deduct your taxes or use tax credits to pay less taxes today, but that doesn't mean that you shouldn't be putting together the plan to avoid taxes in the future. For most of us, we believe taxes will be higher in the future, unfortunately, and for that reason I think it's important for us to do the right planning right now in what we in the industry refer to as the fire sale in taxes.
There's a lot of that going around. I wish the news were a little better on the front, but I think you're right. I think it's going to get worse before it gets better. Ali, thank you so much. It's really extraordinary. Very, very helpful.
It was our pleasure. Thank you so much for having me.
Ali Hashemian is co-founder and managing partner of Profectus Financial in Los Angeles. Thanks again so much for being with us today. We here at PJTV hope you learned a few tricks on how you can use some of these tips to save money on your taxes. And also be sure to visit the PJ store, where you won't want to miss our entire special series, Death by Taxes, How the Government Steals from Us. It's available right now and only in the PJ store. I'm Bill Whittle for PJTV. Thanks for watching. We'll see you next time.